Okay, good morning. This is Simon with Trade and Perform Coaching, doing the market preview for 2/26/2019. So let's jump into it really quick. By the way, past performance not indicative of future results. Thank goodness for all of us. And what else was I going to say? You can lose a lot of money trading futures. Make sure you know what you are doing and don't simply follow someone blindly. It's not a great way to make money. It creates a lot of insecurity. It actually does the opposite. It creates a lot of insecurity within yourself until you learn what that person's doing and you understand it and you make it work for yourself. Hey, good morning, Bill. So let's get started with CL. So first of all, CL had a big, see, we've already started. This is only a US session. We had a gap down and basically a huge island reversal yesterday from the 22nd. This is, again, U.S. session only. At the end of this, I'm going to talk about something. I had a lot of people talk to me about that they lost money yesterday unexpectedly at 6 a.m. when the president made a tweet. And I wanted to talk about that for just a minute, but let's just talk about where support lives. Okay, so number one, we usually balance after a big down day. You can get it to tumble day after day, sometimes to the downside. That type of trading behavior usually occurs closer to the low than it does to the high. Usually what you end up with is a balanced day inside as we repair the prior day's trend day down chart. And I did point out on this chart how thin, when you see a day that's this thin like you had on the 20th, if you get underneath, see how so if you look at the 20th, what happened was they tried to repair the CL chart, right? And then they tried to repair on structure. But what happened is once you got underneath the structure here, there's nothing here. So this was the mid of the half gap where we responded yesterday, just past the mid of the half gap. This is the first anomaly. It also happens to be the settle price, the 130 close at 214. And if you look at that profile, it doesn't look much better than this, but it's certainly better than this one here. And I would expect responses out of this area. So, Bill, you asked me while you're in the room, why the 53.89 to 53.75. Okay, I will give you an answer to that. So, Bill asked why I put a white zone there, and I'm going to cover that really quick because what you will see a lot of times is when we have a structure like that. Okay, so see how this structure is somewhat similar at the bottom, Bill? And where I would have put the white zone would have been right here. So I'm going to make it a different color just so I can remove it. But it would have been from here to here, this little area right here. And you see we overshot it. We would have overshot this white zone, established underneath, and then established back above and backside tested it. So it's simply an observation. You're correct. There's not a clear distinguishable anomaly at the bottom of this profile. However, many times when we get to the bottom of this and we do an over under, when it looks like this, when it looks like this, or it looks like this, wherever that little ledge is, when we do the over under into the single prints, right, and then we get back over, it reverses. So that's why it's become a white zone. Does that make sense? $213. So you're asking me, what are you asking me about the 213 profile? Where would I put the white zone there? I would have said it was up here, and then there would have been another one right here. It can way overshoot it. Does that make sense? And then I just got to distinguish, like, this would have been yellow because we're trending up, and clearly the targets would have been above versus I would have expected. So these would have both been yellow zones, actually, because it's not the profile's not stretched. We're not matching. Here's my time zones. Let's make sure we got it right. 8 a.m. to 1300, 1330. Okay, so that's fine. We're not matching. We'll cover it later. No problem. Okay, so that being said, we have a poor high and a poor low on CL. I don't know why this is bouncing around with me, but it is. We have a poor high up here and a poor low. All that means is when this gets challenged, it's highly likely to break. All it has to do is break by a couple of ticks and create excess on either end of this to be repaired, but it needs to be repaired. I'm looking for a response out of that 32, 54, 72, 54, 82. And again, I'll look for the individual setups within that process to make my trading decisions. I'm looking for the traps in those areas to set up the trades. I'm not bullish or bearish. And there's one last piece. If you look at this, right? So you need to mark it on here. I don't know if I have it marked off, although inevitably it's going to line up with something pretty close. Swing low. Swing high. Where's the 50-60 residing? Right here. This is the current, from current swing low to current swing high. It's got to be right there. That is where the 50-60s are chaining. So I have a light blue zone here, meaning I usually think this is easily broken, right? There's an anomaly there, but it's really weak. And then I have a white zone back here. So if I were going to guess how the structure we're going to work here, if we bust this, my guess is we end up somewhere in this area with an over-under and repair this chart. This whole chart freaking sucks. That 214, I am not trading anything just into support on this deal. Obviously, I think the 50-60 will get a response. But there's no way I'm just buying into this profile. If you look at good profiles versus bad profiles, that profile is horrible. Like, that's a decent profile. That's a decent profile. That's a decent profile. That's a decent profile. This is a twig. There's just nothing. You want some curves in it, right? So there's no curves. That's my 2 cents about that. And I'm not bearish on CL. So that's that. So moving on. Those are my support resistance levels, and you can see we're inside prior day's value. By the way, one other note. Inside prior day's value, it gets slippery. You're expecting chop, and you're looking for scalps, okay? You're not looking for big extensions one way or the other, right? And again, this profile was very skinny. You can get auctioned all the way through from value area low to value area high. Value area low on CL ended up at the low yesterday, and where I would expect rejection is actually up out in this area, even though I had nothing to put a zone on there. I would expect some kind of rejection up in this area for a move back to the downside. Okay, so that's my 2 cents on CL. Let's move to ES. 3 minutes before the open, then we'll hit NQ. So first of all, we on ES, the first thing you'll notice when you look at the PA did not change all that much. I'm going to duplicate this chart really quick without the zones. I know what the problem is here. There we go. Okay, if you look at the PA from the last couple of days, see how before it was just slow, grindy on the way up and every dip got bought? All they did is flip the PA, right? This is not great PA. This is so let me show you what good PA looks like in ES. Let's go back to a time when this thing actually moved. There we go. Take just a second to load. It's not a lot of data. It should be pretty quick. Should have been pretty quick. It'll come up in just a second. Again, for those on YouTube, I don't trade the first half hour, so I could care less what it does. On the open, I'm not an open trader, so whatever. Okay, see that? That's good trading, right? That's January 10th. Rotations up, rotations down, rotations up, rotations down. I can survive this because even if I make a slight error, right? See, if I go long here, right, I get stopped, and then it gives me another entry right here. I cover my loss, and I make a move back to the upside. I have a nice rotation down on the trap back in. I can maybe get a counter rotation on the push back up into the close. I get a nice rotation down after the open. That's the bottom of the first hour, reversal, trap back in, push to the other end of the range, trap back in again, push to the other end of probably value area, and then back up. See that? That is very, very tradable, right? All the way through here, you see PA like that. You get very few days that are like this, right, where it's just grind trend day down. Not a lot to do there, right? But that was right in front of Christmas. But the rest of the time, this stuff was pretty straightforward. I've hit support. I'm going to get a counter rotation. I can trade it with ease. This is crap. It's very hard to trade. It requires a boatload of patience. Okay. It still works, but it doesn't work very well. And when you think about not only the expenditure and capital outlay to trade the contract, but the emotional expense and the stress that's involved with putting on a day trade with leverage, right? There's very little return for my money. Now, what you see on stock twits and Twitter and everywhere else, right, is like, boom, I called the top and it rolled lower. If everyone remember, my 28.20 to 25 was basically my upside target on this, right? We did just open. Let me get ES is down 4. NQ is down 19. It's nothing. ES is up. CL is up 8. Okay. So there's a difference between calling the market and going. So I basically said 28.20 to 25, which I think we hit in the Globex session actually, was the upside target for me, right? Who gives a shit? Because I actually had to be on a trade, be willing to sit in it and let it roll all the way down. This took all day to go from 28.20 to 2800, where this used to be in December maybe a 30-minute move, maybe, right? So a lot of energy has to expand it. I had to be perfect. And if I made a mistake, like over here, and I said 2780 to 2800 is my upside target, right? And it busted above, there was no way. Look how many hours I had to wait just to be able to get a chance to break even. There's no way I waited for this. I covered this and I took a loss, right? So there's no emotional risk reward for me. There's no rotational risk reward. It's all no fun. So I can be done with it, right? So what I'm looking for today on ES, number one, do the rotations come back in and out? Can I get a two-sided trade? We don't know yet. We're obviously gapping down into this is Dalton's gap fill. Right here, we're opening underneath it. We pretty much came to it at the close, right? This is the gap fill. Retail traders trade gap fill. I do not trade gap fill because retail traders do trade it, and that leads to a 50-50 win rate. Sometimes it works great. Sometimes it sucks. There happens to be an anomaly here on this particular chart, which is why this is actually a support zone here, and we're opening into the support zone, and I don't trade the support zone straight in, and B, I have no evidence of rotation, counter rotation outside of a few points up and down in one single bar, again, requiring me to be perfect. What I would look for, there is no Dalton's gap fill here. There's a settle price here. Well, the zones are posted, right? So what I'm looking for is those zones to give a responsive buy. And then I'm looking for, obviously, this is yesterday's afternoon swing high. Getting above 28.04 probably causes a squeeze back up to retest the high, and then get into that 2025 during the day session. One down day does not make a bear market. I would not overreact to that. Usually these end up being one-day wonders, and I'm looking for dips and traps if I'm going to trade ES for moves back to the upside. I think that's still the easier trade. Okay, so when we look at the profile, I don't want to duplicate this profile, but I don't think I have another one. Oh, here we go. I do. There we go. Okay, when you look at this profile, I'll make sure my settings are correct. They are. Okay, when you look at this profile, the clear target down. So we have to get through this anomaly. Failure to get back above this anomaly. Okay, markets like to trade from anomaly to anomaly. This is the clear target down from that perspective. These are general areas, but they make good, if you're throwing darts, pretty damn good places to throw darts. So failure to hold this 27.91, which we're opening up into, right, would bring up, there's really nothing down here. There's a small anomaly right here. It's an right? So what would be ideal in this situation is we come down, test the 27.74, 27.71, which is certainly within reach. It's only 20 points, right? Then trap back in to the low of the 22nd and swing back up to 91. That would make a lot of sense to me for the way the market's going. Or choice B, if it gets really ugly, this is the top of the open window. Trade below, then trade back above. There's a single volume point of control here. This is weaker than normal, except it lies right where Dalton's gap fill would be, which is right here. So Even though that would normally be weaker than normal, I would expect a response there. Again, I would look for the trap here back about 27.64 for the push back up. And if it gets really nutty, all the way down to 27.52. Again, remember, markets switch gears on you, and they switch gears without notice. Okay, if the range suddenly expands, 27.52 is doable. Why? ES is only down 6 points, right? We have a 50-point down day. This is where we're at, right? My guess is we don't get any further than this today at an extreme. And this is where I'm looking. This is my highest odds for today based on what the current range is, right? And then my other thought is this makes a good balance area, right? If we trade from 59 to 90 and start consolidating our gains here, and instead of correcting through price, we correct through time, this would be a really good place to base out, meaning this area can get swept through both sides really easily, trade more stops, nice stops. Then this area below that, right? So this area down here would create an extreme for traps back in, and this area up here would create traps for extremes for traps back in, and then we start sweeping this area. An example of that, right, would be like this. Okay. Now the market moved up a lot, right? And then it decided this area would become the balance area. So all of this, right, became the extremes, right? You could short up here for moves back in, and then underneath here, see the bottom here? So that kind of became the bottom. It never really moved. We never got extremes to the downside because we were pushing so hard, but this would have been the edge of that balance area. And anything that pushed out would push back in, and you would keep sweeping this area, right? So that's my 2 cents on ES. I don't expect it to go in any one particular direction very fast. I don't expect it to fall apart. I expect it to trade two sides, and I expect it not to correct in price. Now, Peter's in the room, and I have a lot of respect for Peter. He's my best swing trader perhaps I've ever had. He's fantastic at it. He's primarily an options trader. Peter expects a dramatic downturn somewhere over the next couple of weeks or months, and he trades like, so remember, he's a swing trader, right? But he expects, and he has a very good point. When you look at the overall move on ES, there's a problem, okay? And the problem is this. We erase all these lines, okay? See where the market leaves large spaces where there's no naked points of control? I'm going to point to them. Boom, boom, boom. If we get past this 27.52, which is not a lot, right? You have an express elevator to 27.09. At 27.09, if it doesn't hold, which it should the first time, you then have 26.85. And if you get underneath 26.85, see this space underneath here? That's a scary space because the first place you have both a volume point of control, a naked point of control lined up together, these are strong. These, okay, this is strong. This point, this point, this point, this point, and then all this negative space through here, right? All of that can be very, very, very easily traded through. That does not mean it will, does not mean it has to. It just means that if I get underneath this 27.09, right, and I get short setups, I will start pressing those short setups because I know we can end up sweeping this whole range. And this whole range is almost 200 ES points, okay? And to give you an example of what that looks like, when you look back to the left, when we were going up, see when you look back down over here, and I would have said the same thing. Oops, sorry. Okay, and this applies to all markets. Okay, so see over here, when we were down here, first thing I would have said is, really? There we go. First thing I would have said is, there's a ton of space. Nothing's really stacked till 2600. And then I would have said, as we're looking up, that if, see how these are all individually spaced with the exception of this right here and this right here. And I would have said, if we could get above this right here, right, but there's a boatload of room to run because see how these are only individual points of control that have been left behind, not both TPO and volume points of control. And then what you end up with is, and by the way, Peter on December 25th sent me a message saying, I am loading the boat long here. He said that December 25th and December 26th. He said, I am massively long. There's a lot of upside, and his extended target was only 27.20, so he fell short, but that was his extended target. He loaded the boat on the calls, right? And you can see once we get past that area, see how we just ripped? Because there was just nothing there to hold us back. Okay, we have the mirror image of this underneath this level now. Underneath 2685, you can rip. So that's my big picture analysis, short-term analysis. PA hasn't changed. Imagine we're going to trap some shorts and squeeze them up. If you are trying to short for the end of the day, by the way, one last note on ES for my ES traders, right? If you are trying to short, like yesterday, actually I have an example of this, don't I? I do. If you are looking at this going, wow, we closed on the low of the day, and I'm going to start shorting the last hour to try to pin it, okay? Especially for the new people in the room, okay? Over and over, when you get to the end of the day, doesn't matter if you're in an up market or a down market. Go and try to find how many days in ES close at or even near the low. And the answer is less than 10% of those days. When you get to extremes on the downside, you get this, right? This is back on January 3rd, right before we hit a low, right? But imagine the guy who looked at the close like this and said, oh, we close on the low. I'm going to short for the last hour, and look at his life over the next months, right? He didn't make it to this because he's already broke, right? He's over leveraged and he's toast, right? But if he looked at that, even when we were in the grip of a bear market, right, and we started closing near the lows, right? So he saw this series of days where we closed near the lows here, and he started saying, I'm shorting the last hour. You are making yourself human cannon fodder for the bulls. They're just going to run you, rip you, and take your money. They're almost always traps. They're not necessarily tradable to the long side, but it is a sucker's bet with very few exceptions to that rule. So my suggestion would be, do not read this as a close on the low of the day and think this is a reversal, nor should you think I can short the last hour and get out scot-free. Odds are you're going to play with blood, sweat, and tears for those last hour shorts. They very rarely work out. Okay, you need to be really, really good. The last hour is crazy hour. Let's go to NQ really quick. One second, I gotta plug something in. Get this on. Get a sip of coffee, and we'll cover NQ. That feels good. Okay. To the last piece. NQ. CCL. Where is my NQ trade? Thank you. So, good job, Peter. Nice trade on your Russell 2000 puts. Let's see. Powell in front of Senate Banking Committee today at 10 a.m. Eastern Time. Texas testimony released at 9:45 Eastern Time. So for my time, 9 o'clock, we have Powell, right? That always. So this is important, traders, right? Powell has been goosing the market, whether he wants to or not. He has, right? Secondly, they're releasing his testimony in 2 minutes. So if you're short or long in front of that, you're a gambler. Have fun. You're not trading odds. You're just trading whatever the heck he's going to say. So no fun. Enjoy that. Not for me. Okay, let's go see what we got here. I can't find my NQ chart to save my life. There we go. Wait, I got to fix one thing here. Close. Yes, I don't want to pull too much data. I'll leave that up. And let's do this really quick. Set up the profile, one range bars. Trading was actually pretty good overnight if you look at the trap. Right? Look at the close back in, roll down, trap back in, roll up, trap back in, backside test, roll down. Wasn't horrible on ES. Just don't like it. And you can see we opened up right in support, right? and pushed right up into prior day's low. Wait. Let's make sure this is hooked up to the right chart. It is. Okay. Where's my prior day's high? Oh, all the way up there. There we go. Okay. And we're above the 24-hour VWAP, right? Biggest push down, trapped above. That's your first resistance. Remember, light blue is the weakest resistance, right? You're trapped back in. If you short this, you are betting you're going to break back below prior day's low, and that's a trap. You're basically making this bet right here, right, that occurred in Asia. My guess is this is a much safer place to go into the waters, short side. I would not be eager to short. I don't think we go straight down. Maybe wrong about that. But it's not that we won't go down from Peter's perspective, swing perspective. It's who the heck wants to get trapped early, especially with Powell. We could easily V-shape that crap. So just be aware. Okay, so going to NQ. Oh, there you are. Sorry, too many screens, guys. Okay. That CL profile. Q profile. Okay, let's duplicate this chart. Chart settings. Yeah, let's not do 500 days. Yeah, I'll load in just 1 second. Okay, let's erase all lines so we can discuss this. Outside of the zones that have been posted for members, I'm sorry I have not been posting publicly. I'm just trying to get into a pattern, but it just hasn't been easy with my wife's situation. And we're selling our house, we're building a house, and then I have another house that I'm fixing up. So no one's gonna have empathy for me on that, but there's just a lot of crap going on outside with contractors. Okay, poor low, poor high, easily broken. When you see this, that's the definition of poor low, poor high. Either side of this can get very easily broken. I would not want to short the high or go long the low. On this, I'd wait for it to get above and repair or below and repair. It doesn't have to, but I would, right? So if you look to the left, right, see all this right here? Everyone agrees on price in here, okay? Basically from here to here is where the majority of that blue is. See that? Everyone agrees on price. That brings up a challenge. You can sweep through where everyone agrees on price because no one feels like they need to defend. And if I were trading this area and I wanted to get long, I'd be looking just under here. Why? Response, response, response. Open drive higher, closed above, right? So prior to that, right, that area was an extreme where we pushed back in. See that? Markets repeat. So my guess is underneath 70.11, you find responsive buyers back up. It's 100 points away. If we can somehow get a down rotation, that would be a good trade, right? And that would be a good area. That's where I'm hunting in general. This area is easily swept through, and we're not bearish until we get below and hold below this swing low, which is all the way back at 68.34, right? Meaning you got to break the swing low, right? So unless we come down, create a new swing low, and we can move to the right, that's your point, 2.8, right? Then you do your next thing, which is important, right? You come through and you draw your 50-60. Why do you draw the 50-60? Because every guy who thinks he's going to be a professional trader in the world draws it up, and they all trade there. So you get a response. And that brings up this, right? Okay. Again, that brings up 70.11, which makes a lot of sense. I get so that's another piece of evidence of why. So I want to be long for a good reason. I can actually see visual evidence of rejection and support. But if you just draw a 50-60, which is shocking how many times it just lines up perfectly with where the structure would be anyways, that's the area, right? So this is the trap back in right here. That's the old swing before we had made it last attempt push down. You got to hold underneath that 71.06, which we're dancing just above right now. The clear and present target, if you're shorting, is the 70.11 area where I would expect a response for lots of reasons. And if we create a new swing and then push to a new high, your new critical level would move from this point to this point, assuming that holds. You will notice there are no volume points of control and TPO points of control close together. That comes up here and comes up here. The issue here is if we get down here and we get the response that this could end up serving as resistance at that point for pushes lower, but we'll fight that battle when we get there. Okay, so for right now, I don't see a change in character. One down day does not make, right? So even though it was a trend down day, we did not close back into range, right? We did not hold under prior day's low. We did not trade underneath the prior day's value area. We didn't close underneath the prior day's value area. There's nothing bearish there yet, okay? And there's still plenty of room on the upside if they want it. And again, in case you haven't heard, there's a China deal coming. So that's that. That's my bit of snarkiness for the morning. The levels have already been posted. I expect two-way market. If you look at the 5-minute chart from yesterday, it traded a whole lot better, right? You actually got clean rotations up and down. This is a dramatic improvement on NQ, and I'll put it back on the plate. See how before we were just straight down, straight up, straight down. See over here how we rotate up? So now look at yesterday, right? Rotate up, rotate down, rotate back. If I make a mistake and short the 50-60, they give me an out, right? Trap, push back up, back to the highs. Break, IB low, backside test, IB low. Roll to the downside. Traps, where they big hard pushes underneath, trap back in, push back up. That's all very tradable behavior for me, right? And so I'll put NQ back on the menu and look to see if we can get more than one day of that, which I'm hoping, right? I will take very few stops on that too, specifically. So if it doesn't work early, I'm done, right? It's going to be after, I'm going to give it after the first 30 minutes, obviously, because Powell's speaking. So I'm probably pushing back to 9:30 now due to Powell speaking. I don't like to get run over, okay, on random pieces of news where people just say boo, and I'm down 20 points on an NQ trade or down 5 points on an ES trade. That sucks, right? The swing that needs to be broken right now is this swing right here. Even though I don't have it as a support area, that was the last swing low before we gapped, and that is likely this area. So this is just the top of an open window, right, is what that is. So somewhere in this area, I would expect it to attempt to get defended in that 70-54 area. I don't know if I have that on the chart or not. Obviously, I don't because it's not here, but I should. Let me see why I didn't put it. Oh, I know I didn't put it. Scratch that. X. No, no, no. Came within the prior day's range and can be easily broken. X that. If it sets up, that's great, but down to 70-20. I have a black hole here in this area. And by the way, normally if you put this, you're going to be right about 50% of the time. It's just not good enough for me to put a zone there. So that's that. That probably gets defended first time in. You could put a light blue zone there if you wanted, but I don't like the way that looks, particularly when it came within the prior day. This is really the big one down here at 70-20. So I'll watch in that area. This can easily get swept. So that's my 2 cents, guys. Going back to setups, right? And I want to cover this. I wanted to cover something specifically in CL. I had 3 different people. So let me set this up really quick. So there's ES and NQ. Okay, so I want to go to CL for just a second. I had 3 different people tell me yesterday. And why is my CL chart jacked? Oh, it's not. Here we go. Just from yesterday. Chart settings. Advanced settings. Chart number 7. Cancel. Just need to check one thing real quick, guys. CL profile. Got it. We'll fix that. Off a different profile. There we are. Okay, so See that blue area, how it keeps getting traded through? It's a support and resistance area, right? See that overnight? It's a support and resistance area. It just tends to get traded through. Okay, so that's that. There's nothing else to say. That was prior day's low from yesterday. We're obviously trying to push. You obviously need to make it underneath this swing low from Asia and Europe. Okay, 6 a.m. yesterday, right? And people were, so I don't know what methods they were using for trading or anything else for that matter. I can tell you what I was using. So I want to do two things. First of all, CL closed at okay. That is a long liquidation profile, right? When you close with a B, okay, that is not a short covering profile. That is a long liquidation profile in the US session, okay? Number two, this was your only hope of holding this up because you see this profile like this right here, I can get swept. Okay, so I'm going to cover this for everyone who got bone crushed on that, okay? Prior day's high, right? Prior day's low, right? Point of control. Okay, see how belly shaped that is, like a pregnant woman kind of thing, right? It was filling in the volume, the lowest, most porous part of this, right? But this whole thing sucks and is easily traded through. And when you look, see the lack of point of controls. This is all US session. Let me make sure I got it right. Yep, it's all US session. See the lack of points of control underneath from the TPO and the volume profile? Easily swept. It's a black hole. That's what you get, and this is the kind of price action you get. So what I would argue is once you were below prior day's low, below prior day's value area, and then you got below the point of control at 56.93. So that 56.93 is what I'm focused on because this right here, this is my last hope for a response. That was a white zone and it got blown up. Okay. So that 56.90, that 56.93 is what I would have been hanging my hat on, right? And even at that, it was in the middle of the prior day's value area and on an inside day, right? So it's weaker anyways, right? So now when I go back to 56.93, that is right here, okay? So everyone was correct. If you look, we came right into support at 2 in the morning and bounced off. You were all good. Notice that everyone and their brother, so supposedly the announcement came here at 6 a.m., right? Once you closed underneath this, notice that they tried to respond. See that? And you got your fractal. So people on YouTube, you're not going to understand this, but you got your fractal with your speed bar. You do not want to freaking close underneath that. That is your trap location. You closed underneath. But even prior to that, right, if you look at the consolidation on top, right, what is going on here? Look at your other pieces of the clues if you're trading 24 hours, right? So here's your biggest push right here. That is your biggest push of the European session. So what do you not want to do? See that fractal right on top? You don't want to close back into it. Even though you get other clues, this was the top. You don't want to close back in. I'm going to highlight that, right? Don't want to close back into it. If we're strong, right, never a reason to get underneath that, right? Next, here's the base, right? Once you are underneath that base, right, see how that base came with the biggest push to the downside? Okay. You did not want to retest this. And if you did, you wanted to trap back in quickly. And notice it gave you no fractal. Your trap actually had to come back all the way over here. Guys in the room will understand this. Guys on YouTube, forget it. I don't have time to explain it. But that's where your trap location was. Back in. Okay. But even if you look at that, what is this? Delta divergence all the way up through here. Look at the waves getting smaller and smaller and smaller. And then the biggest freaking clue, 5:30 in the morning, huge push relative to the delta divergence we had. Look, so what did that yield you? There was a swing high. The biggest push after the delta divergence, right, came at 5 a.m. They can't get a green bar on that push. You can't get a green bar with a point of control above the high, right? Above, close back in, close underneath this last push, and see ya. That is a perfect short setup, right? That's a perfect short setup. And you had clues here, here, and here. And then look at all the speed bars. The blue speed bars indicate attempts to push up really hard that failed. And as soon as we get underneath these guys, I understand that there was a news event that drove this, but this setup, this push to the downside, I'd have already, if I'd been here trading, I'm already short on this bar right here. If I'm not short here, I'd have already been short right here, right? And additionally, if you look at that, right, overall, we pushed, if you look at the bigger picture, pushed to a new high, trap back in. We already started downtrending from the 22nd, Friday. We're never able to break, right, the last swing high from Friday, right? And then if you come back in, now, right, here's your big push. There's your swing low from the European session. They try to hold it, right? And that was a support zone. You closed underneath, and it was all over. You should have been looking short and down all the way through that from that point. That was break of trend day down. And that, so I don't know what other method people are using, right? But that's how I would have traded it. And that is consistent if you're in the room. You know, that's consistent with how I look at the market on a daily basis. Right now, barring whatever the Fed speaker is saying, right? I'm looking at this chart. I'd set it up just the same way right now. So if we go through and just do practice for setting up, right, what would this look like? So I get no fractals to the downside. I'm on the proper range. This is my trap back in right here, right? That's the last fractal that I broke. So if I erase all these lines, okay, so that's a zone, right? And I would have said two things. Number one, close back in after breaking this, right? And I would have said, if we close back in here with a point of control, I am long. My stop would have been all the way the hell down here. Let's see if that falls within my 20 tick limit. That would have been 46 for 28. Bingo. I'd have been long right there. Okay. Number two, biggest push down, right? Notice here's my swing low to the left. Biggest push down on Delta. They close below. Trap back in. Realistically, I'm probably long right here on this trap back in. Stop right here. And then what I'm hoping for, right? Again, this is 8:13 in the morning. It's hard to trade CL at this time, but trap back in, close back in. So, Peter, this is exactly what we were doing in coaching, right? Trap, push, close back into the swing low. Now you're hoping instead of scaling here, right, you get the close back in, hands off, let it run because you're about to face rip to the upside, right? Now, right, now I have some markers. I have this marker. Without looking at the zone, so I don't have a zone, right? My next zone is all the way, that's value area low. My next zone is all the way up here, so I'm in a little bit of a freestyle area because there's nothing for me to do up here.
You'd like to hear some freestyle.
No,
right?
Alexa, be quiet. What the hell? I turned that off. There you go. You're off. Thank you.
Go Your Own Way, 2004 remaster for digital. 2004 remaster by Fleetwood Mac from Spotify.
I've actually turned the mic off and she's still going. I hope I never plot to murder anybody. I'm totally screwed. She'll hear every word I say. But it is kind of funny, right? So when you look at this, what I'm hoping for is this. So I have multiple setups. I can either close underneath here. That would be a short, right? What's the formula? Short. Wrong tool. 50-60 back. So short, add, and then hope that it rolls over because I'm not trading at a key location, right? Biggest push up right here, right? So this is important, right? I now have, so if I redo this, which I constantly draw and redraw, if I get underneath here, I'm going to do everything I can to set up a short for a push to the downside if I can get underneath here, number one. Number two, what would I like to happen? So I got these fractals to the upside, but this is my speed bar fractal to the upside. I'm really hoping they come up and test value area low from yesterday. Then I can get push up there, right? Close back in here, short here, stop at whatever the swing is, as long as it falls within my 20 tick parameter, or I have to cut size or wait for the 50-60, one of the two. Enter here, drop my 50-60 over here, and I am hoping for next a close back into the top of this, which I need. I want to get below my last fractal here to the downside, and then I do not want to close back into this guy once I get below him. Actually, any of these guys, once I get underneath them, I don't want to close back into them. And then I'm hoping for this I'm not worried about, should easily go. And then I would expect a response right in here, right? First time in. And if I can get in underneath here, I have a home run, right? So that's one scenario. Scenario two is I push down in here. They attempt to break this level. They hold. They trap back into this guy on the upside. And I get long over here for push back to value area high or locations higher, because there is room all the way back up to 56.36 and then 56.64, which I think is achievable, right? So again, I'm not bearish or bullish on CL. That's how my trade set up, and that's why I would not have gotten clipped. I would not have gotten clipped going back to yesterday's example at 6 a.m., right? That is why, even if I was bullish at 6 a.m., and I don't know why people were bullish, because that thing had an ugly profile, but whatever. Everyone has their own style of trading, right? That's what makes a market, right? But see all these guys? I do not want behind. I'm just going to draw a line right here, and I go, if I'm behind here, I am wrong, okay? I don't care what your time frame is. You get behind here, you're wrong. And then if you get behind this push, you're really wrong, right? So that's my 2 cents. That's how I would have set it up. If you got smoked yesterday, I don't know what your trading style is. It certainly isn't my trading style, and I don't have a problem with it, right? But you got to remember, when you're trading CL, you're trading, and I'm saying this because I don't like to hear when people get hurt or blow up, right? You're trading against sovereign funds. You're trading against institutions. It has the lowest denomination of retail traders and the highest denomination of institutional traders. And let me tell you, they do not care about your support resistance levels when they perceive new fundamentals to come into the market, and they will sweep a location, right? You have guys, if you haven't read this book, The Secret Club, The Secret Fraternity or Secret Club That Rules the World, okay? You have hedge funds that have $2 billion in cash and are leveraged to $10 billion, all in oil contracts, okay? There is no D-League in trading, right? There is no Canadian Football League like there's in the NFL. There's no junior league like there is in European football, right? There's no B league. You are always trading. You are always playing against the best. Every guy you are facing that you are trading the other side of is not me. Every guy we're trading against, you are trading against Muhammad Ali every freaking time. You're trading, and they are all freaking vicious killers. They may dress in nice suits and drive nice cars, but they will freaking pick your pocket and send you to the poorhouse and let you sleep in the Salvation Army at night. You should remember that if you're not fearful of those guys and respect them, something's wrong with you, not them, because they're showing you their face really clearly. And I learned that lesson a really freaking hard way, painfully. I blew up 2 times big, right? And I drew down hard multiple times by not respecting the guy on the other side of my trade and not understanding. And Chris Laurie taught me this, understanding the flow, the order flow, and how it works and how those guys think. If you do not understand the mind of your opponent and what they are trying to accomplish, you are setting yourself up to be cannon fodder, human cannon fodder, right? Because they're going to take all your money, every single penny of it, right? So the reason I'm on such a micro level is I need precision on my entries, because I have no chance on the bigger scale of predicting where oil goes. I triple dog dare you. Go look at the oil reports from Goldman Sachs over the last 12 months, and I'll even show it to you. Here, it's easy to do. Headlines: Goldman Sachs can see a squeeze in oil back to $110 a barrel. That was right here. Not quite. Right here. Goldman Sachs, we could see $25 to $30 a barrel again. Okay. They were almost right. All right. No one gets this right. I'm going to assume Goldman Sachs is one of the most astute analysts out there. They hire the best brains in the world, right? These guys constantly F up the call on oil, constantly, right? Which is why you end up with such dramatic, awful, terrible moves when you're trying to swing this thing and you get your clock claimed. It's also why, right, when you get on the right side of that swing, you make a ton of money. So you need to learn and all the information you really need is in these little micro bits of information between this and sorry, and I messed up my NQ chart, so I'll go back to it. Between this and these little bars, all the information you need is in there. And so I say this because I've watched people struggle for a long time making money. I see things on the internet. There's a guy I follow named Tom Campfield or something like that. And he talks about his struggles all the time, how he's been doing it for a year and he's break even. Or there's another guy called Odd Stats. I don't know who the hell the guy is. I actually he totally annoys the daylights out of me, right? But he at least publicly said he blew up a multi-7-figure trading account this year. But yet he posts all these stats, right? If you look at the stats that he posts all the time, it's called Odd Stats or something like that. And he's like, when the market's done this, 60% of the time it does this, and 70% of the time it does this, and we've only had 3 days where it's done this and hasn't rebounded. Yet that dude blew up. Like, he knows. I don't know anything about that. If you tell me when we close on the low, right? How many times do we close on the low 3 days later again? Shit, I couldn't tell you to save my life. Okay, guys, it's 9/11, and I'm gonna go cut it off by 9:30 because I want to start trading, but I want to make sure I'm well clear of anything that jackwad has to say, otherwise known as our chair fed. I've been trading for 20 years, right? I know a handful of millionaires that made their money from 0 to $1 million. A handful of guys. Now, I know guys in this room have taken $20,000 accounts to $800,000 and all the way back to 0. Okay. Now, I know a lot of guys that have made millions and are back at 0. A lot, probably 3 to 4 times more than the guys who've started at 0 and are currently and have remained millionaires. Okay. And they all have one common understanding. Number one, whatever their edge is going to disappear over time and that they're going to have to adapt, right? Number two, the market's going to change. It's the only constant, right? Number three, news sucks. If you can tell when the news is coming and you can steer clear of it, great. The guys who trade the news and say, boom, look what I got, and you see it on YouTube and all that, those guys are gamblers. They're generally not traders. There are fundamental traders, guys who are trading non-leveraged, big, fat, juicy, multi-million-dollar accounts, and they're using 1 or 2% of that exposure to trade the news, and they have a fundamental strategy that they are trading underneath, right? Or they are not caring about the news at all. Peter's a great example in the room of he looks at the data, he looks at what's going on, he looks at the chart, and he comes to an assumption, and then he lays out his risk according to where he won't go broke if he's wrong, and he manages that trade using size, meaning he distributes his size over time and over multiple trades, and he works that trade in and out to adjust his price point. And then he knows, because his time frame's wider, that he will usually get paid. But he's had some very bitter, painful stories as well, right? My whole point behind this is, if you think you can look at the market and know what the hell it's going to do, anything beyond the next 10 or 20 minutes, you are in the very rare few class. And if you can actually do that, you should actually be a billionaire, right? Even Warren Buffett can't do it on a regular basis. He's getting blown up in Heinz and he got blown up in IBM, right? No one freaking does it on the regular. It's really hard. And look at it this way. If you're predicting the weather, what's easier? Predicting the weather 20 minutes from now, predicting the weather 48 hours from now, right? If you watch the news channel, those guys get it wrong all the freaking time. 20 minutes is a lot easier, okay? So my encouragement to you is learn a method. It may not be my method that works best for you. It may not be my style because I trade leveraged, concentrated, and I'm not trying to hit a home run, although I get them on from time to time, right? And I'm very focused on my capital preservation at the end of the day and my mental preservation. at the end of the day. But if you are trading and you think you can see some schmuck on YouTube, or you can throw me in the schmuck category as well, because I don't know anything more than anyone else does except for what my entries are, right? But if you think you look at it and they go, oh, it's easy to trade, that is total BS. It's the hardest way to make an easy dollar in the history of mankind. And there's a reason why it looks easy. There's no barrier to entry, right? All you need is basically $2,000 and they'll let you open a futures account, right? Number two, and a computer and a mouse. You're in. Congratulations, right? Number two, it takes time to learn this, right? Even once you know the patterns, it takes time to learn what the patterns look like in real time. Showing you this in static, right? So I can go all day long, right? I could have gone all day long. Hey, if I close back into this bar, I'm long, right? Well, I can show you that statically. Try to do it in real time and then look at all the questions that pop into your head while you're doing it in real time. Freaking hard, right? Because all your doubts, all your fears, all your insecurities, all your I don't want to lose any money stuff comes into it. I'm already up on the day. I'm already too far down on the day. I don't want to close on the low. I got to find a trade whether I get a setup or not, right? Or the worst one is I've got to make money because it's going to change my life dramatically. The only reason to trade is because you like trading. You can read a chart, right? And you have a proven edge and you're willing to stay disciplined and execute that edge over and over and over again. Accept the losses once you've accepted that you understand your trade, right? Accept the losses. And then recognize the last little special piece, right? The last little special piece is, like I said yesterday, you don't get them a lot, but they do pop up. I'm going to go back to oil again. I said it in the room. I called it in the room. And I said, when we were up here, it's right over, hell, I forget where I was short yesterday. But I want to say it was after 9 a.m. So let's see if I can find it. Oh, that's Thursday. There we go. It had to be, okay, I said, I'm going to go with, I don't remember where I was short, but I want to say it was 56.12. What have I been using? Dun, 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 dun. I think I was either short here. I had to be short in here, I think. I was already short for this. So I think I was short on the close above and then the close back in at 56.20 was probably my entry. And then I started scaling near 56. I took some off at 56. Then 55, then I forget what my next scale was. 55.55 was my next scale. And then we came into support at 54.20, which is where I was looking to get long, right? And I did attempt this long here at the end of the day. This was the trap back in. I should have taken that on the biggest push down. I kind of goofed that entry, and I was long right here was my long. And I tried to get a scale at 54.68. I missed. I closed 54.50. But the point was, getting below the white zone, I knew that there was a long way down that we could travel, and I was going to pound that trade, right? That's the last piece, and that's the hardest piece to put into place because you got to know what it looks like from the bigger time frame when you can sweep a location. Okay, so that's all it takes. If all of that sounds totally daunting to you and you don't think you can do the work and the time and the pattern recognitions and the frustrations that go into capturing those trades, right? If you can't do all of that, quit trading. There's easier ways to make money. I'm totally serious about it. Quit trading. You're just going to sit here for a year, 2 years, 3 years and not make any money. And you've got to learn the with every business, whether I've invested in it or been involved, right? And when some guys go, oh, the little details don't matter. Like if I'm sitting in a meeting, someone's pitching me, and I start asking them questions about the minutia of the business, and they go, well, that really doesn't matter. Look at the big picture. I'm out immediately. Screw the big picture. Because if you can't execute on the tiniest level, you can't make the machine work. That's what I've learned from getting burnt in that field as well, right? I had guys with freaking, we're going to make billions. They didn't execute worth shit on the tiniest level, and it totally screwed them. Same thing happens in trading. So please do yourself a favor. Your money's hard to come by. CL's running, by the way. So whatever Mr. Fedman said, the up isn't a shock at all. And again, everyone looked at yesterday and said, that's it. That's the top. We're rolling over. tops take time to put in. We usually don't go from straight up to straight down. So that's my 2 cents about that. If you hate me now, that's fine. I don't know what to say about that. That's the reality of trading, right? Is that it takes time to learn it, and it's not enough to follow someone blindly, which is why I encourage people to do coaching and learn their methodology. And all I can say is, in general, in every market, when you see a market consolidating at the lows, do not think it's going to go lower and start shorting in there. It's a great way to get smoked. That's my 2 cents. So, guys on YouTube, thanks for joining. I pretty much posted the trade plan for the day. I think we have 56.18. Thanks, Randy. That was where the short was yesterday. And then 55.55 was my best cover on that short. And then I flipped long 32, and I think 55.50 was my best exit on that. I didn't get the 68 cents I was trying to grab. So getting to work now this morning. 2 things on CL. Let's go take a look at it and where we're at. Wow. So that's what you get when you trade news. It was just running. Now it's not just running. Let's look at this. Looks like I missed my entry. Thanks, Mr. Fedman. Okay, but this is pretty. Fractal. Close above my fractal. So this is the first attempt to trap back in. That short would have worked. Close above. Close back in. Short. I would have been short right here. 50-60 back. Added. Stop. Roll. Well, that little talk cost me a little bit of money, right? And now I need a downside press to get a reverse. I don't have a setup for a long up here yet, so we'll see what it does. There's CL. Hopefully it sets up and I just didn't miss my op. Daniel, did you grab that? I hope you did. Ooh, don't do that. Come back. There we go. Thank you. We are still pushing into the resistance areas, right? Those yellow zones are valid locations. And now my short setup is all the way the hell down here. So what that means is I don't have a short setup because there's no way I am shorting this for a stop up here. That's all there is to it. That would be, actually, you know what? That'd be 7101, too much. So I need a 50-60 back. Hopefully we set up over here again. Importantly, through here, we have the biggest push. So the other opportunity there would be, and I'll draw this with a dotted line. Okay, I get you underneath. I get you underneath that 7108, get you underneath the biggest push to the upside. I don't have a fractal. I don't have a fractal trend line break. I have almost nothing. But if I get underneath this, that would not be muy bueno. Okay, and I'd expect a roll to retest this area and maybe push us further down. Let's go look at ES real quick. Again, ES is dead to me pretty much right now, but I'll look at it. We are getting delta divergence. It's just not enough for me to short location. That's location. I don't have the setup yet. You do have these speed bars, by the way. You could use the close underneath the speed bars and the stop above. I still don't like to trade. I prefer to have the fractal somewhere nearby. And we're getting delta divergence all the way up through here. You can see it. This is actually setting up better for a short. If we get a press above, so we've closed above this guy, but really what I'd like to see is a push up into here and then a close back down into this area to set up a short for a roll back down. We'll see if we get it. And then keep in mind, this is the biggest push to the downside. You close above this level because of this delta push, and you could actually have a nice squeeze to retest the 2800 to 2825. And again, one down day does not make a bear market. So basically I have no setup. Fed speaker speaking. Here's the 5-minute chart, by the way. Your markers are IB low, which this will obviously be IB low, IB high, wherever that lands up landing. And then above, below your first 5-minute marker, that's going to end up being IB low anyways, right? And then retest of areas back to the downside if we get them. Why do I have a purple line there? I have to go figure that out. anyways, that's my 2 cents, guys. That's how I trade. And I hope it helps. There's new people in the room, so that's why I went through all that detail on it. And then the last thing I hear is people trade. Every once in a while, I hear someone trading without stops on oil. It's absolutely freaking insane. I understand the desire to do it because you see it's on a trend and it generally gets bought back up and goes back up. And that works until you're broke. It just takes one time. So if you can't pick an entry and exit and a stop in CL, you have no skill as far as I'm concerned, or you're trading $1 billion, one of the two. Pick your poison, right? And if you want to see how hard it is where things go sideways, read that book in particular about, I think his name is Anouat. He's a French guy, a blue gold hedge fund. And watch what happens to that dude when the market starts rolling against him and he tries to get out. He is totally effed in every way you can imagine possible. He simply cannot dump the contracts fast enough without liquidating the market and maintaining his margin and keeping out of forced liquidations. It's a great, great book to understand the mentality and psychology. When you get a big tiger like that caged, they will frickin' do not give a shit about levels. So anyways, that's my 2 cents. And I'm going to take a little break, get my heart rate under control. It's up at 90. I'm going to push it down to upper 70s. So here's CL. I missed the short because I was yapping. That was expensive. I'll have all three on the chart. It'd be great to close underneath here and then close back in for a push back up. And we're inside of, it's important to understand we're inside of value on CL. And that is an area where you get these sweeps. See how we're getting these sweeps like this? Okay. This is not abnormal. It's normal because we are inside prior day's value and there's no defending a particular area, which is why you end up with sweeps. They're cool if you can catch them. They suck if you get stopped by them. And you'll notice what we're doing, right? Break the swing low, break the swing high, come in, break the swing low, come in, break the last swing, trap back in. That's what it does, right? And while it may look very tradable, it's actually a great way to get chopped. So anyways, that's my 2 cents. And let's go have another good day today. Yesterday was actually kind of fun and encouraging because we're close to getting, it looks like, NQ back online. Notice lack of counter rotation since 8:30 in the morning. See that? No, that's a 6 range. Let's fix this. But even there, it shows true. Where the heck is the trade that I want, the bar chart that I want? No. Yes. Race all lines. Yes. There we go. Notice lack of counter rotation still since 8:30 in the morning. That's a 6 range. Where's the 1 range? Ah, it's the same chart. There we go. 3 range. Excuse me. Lack of counter rotation. See that? That is not counter rotation. Okay. Counter rotation is 10, 20, 30 down, 10, 20 up. That is tag your stops high and low no matter what you do, right? We are looking for yesterday, right? Yesterday. There we go. Oh, that's Tuesday. Where's Monday? Come on, Monday. There we go. See how that's moving up and down? Counter rotation, rotation, up and down, right? See all that? That is what we are looking for, right? What we have right now, it's just going to break one way or the other. Very, very hard to attach, hold it, and let it run. It's much easier to catch the move once there's already volatility. So, yes, we are in resistance. No, I don't trade that. So, all the pieces have to be there to make it work. Okay, guys, I'm going to go on timeout for 10 minutes, get my breathing under control, and go make some money. Talk to you in a bit.
challenge him. And I don't think the Philadelphia 76ers. You're noticing a theme here. A lot of new guys for the Clippers because of trades they made. Yeah. Luka Hayes hits into the